There are two crucial concepts that you have to master if you want to effectively scalp the market. Timing can be the difference from a winning or losing trade. Even if you pick the right direction in the market, if you get in at the wrong time, it can be the difference from a winning trade or a losing trade. And being able to read into the candlesticks and know exactly when to get in can allow you to catch a really big move if done correctly. And then as well, timing to get out of a trade at the right time. Learning how to manage and exit a trade can be the difference from making a little bit of money or a lot of money. One strategy I like to use for timing is using short-term trend lines. The market has a lot of micro trends that it has, and if you can see when those micro trends are broken, a lot of times they can have a snowballing effect. And so right here, I get in on a short betting that the market is going to go down, and my timing reason here was because of this short-term trend line that I have drawn was broken. You can see the market made a really nice bearish bar breaking below that, and I got in based on that break. And so because of that, my overall thought process and read of the market is that we're in a pretty big downwards trend. We've had a little bit of a bounce off of this support zone that I have drawn here, but I think that the overall trend is going to keep pushing the market down. And so using this shorter term trend line, waiting for the timing to work out in my favor of seeing this break, that's how I get in on, in a way, betting against this uptrend that we have. A lot of times that can be a scary spot to get in, but using the break of that trend line works out really well a lot of the time. And you can see my timing was not very good, to be honest. I got in over here and the market kind of just putted around for about 20 minutes and almost actually knocked me out. But because of how I put my stop above that swing high that it had there. And so it was held by a potential good resistance level. And you can see the market, attempted to break that, and now it's really starting to sell off. And so that's where having that overall big picture comes into play. You don't want to just be blindly getting in random spots, because of course you want a reason you're getting in the market. Even if you have these little micro timing things show up, you want a bigger picture reason. That's the key when it comes to trading, is kind of stack things on top of each other, having those bigger picture ideas. And you can see here, I moved my stop to break even once this kind of started moving in my favor, because of course you don't want to let it come back and get you. Timing is all about getting out when the market looks like it's done going in your favor as well. That's what is important when it comes to managing a trade. This trade is going really well in our favor. It's made a nice big move down here. That overall big trend is picking up again, and that was my bigger picture idea with it. And so because I'm up so much here, I've elected to go with a lot tighter of a trailing stop. A lot of the time I like to move down with the swings, but when the market moves down so quickly like this, I want to really get out when it breaks this downtrend here. You can see I drew that on the chart there. And so once the market kind of breaks that, I want to get out, because the short-term trend is done. Again, it's all about timing. We got to get timing to get in and timing to get out. You want to keep your profits when you make them. This market could easily snap back here. We're at a support zone. The market could find support here. Even if it's broken out slightly, it could make a failed breakout in reverse. And so that's why you want to tighten up your stop really tight. And you can see here the market kind of just eventually knocks me out there, and was a great profit. And you can see zooming forwards a little bit, that was really good timing to get out of that trade, because we essentially got in up here at the top of that swing and got out here at the lows. So when it comes to scalping, another massive crucial thing is that big picture idea of having either larger trend lines or bigger support levels that you expect the market to bounce off of. And so for me, I like to use support levels off of a 15-minute chart, because right now we're looking at a 1-minute chart, but this blue line down here is drawn off of a 15-minute chart. And so what that tells me is there is a bigger picture support level that is likely to have the market bounce off of it. And so because of that, I can wait for the market to get to that level and look for timing to get into the market. And so to get that timing really, really well, I initially like to see a bounce, and then I want to look at how the candlesticks are forming. So you can see this candlestick right now, it is working lower, and I like to see that as, okay, the market's making one more attempt to go lower. What happens if it reverses that? Well, I want to get in because it's made a fake lower. And so you can see here, the market then immediately reverses that. And that is the kind of timing I like to get in on. It's a quick fake lower, and then strong buyers come into play. That's when you want to get in on your trade to bet that this is going to go up. That's the kind of timing you want to look for. You want to be reading into the candlesticks and how they are forming. The market had a pretty strong sell-off into the lows here. You can see with these two really big red candles, but then immediately after, it had two big green candles, and then it consolidated for a couple candles, made that attempt to go lower, and then a massive reversal of that. And so I think that is a really strong signal that it's going to keep going up. And then from there, you just got to let the trade play out. I put my stop right below this little pullback we had because my thought was this market is really volatile. If it's going to keep going lower, I'm going to get out and reduce my risk right away. And if it goes up and I timed right, then I'm going to be right in a big way. You want to have an idea of the trade and let it play out. Do not try and go back and forth. Seeing what the market does, especially when it moves quickly, can be scary. And so when it's chopping like this, that can be a good reason for you to think, oh, I'll just go to break even because it's not showing enough strength and it's going to sell off here. And in reality, you got to let things play out, and hopefully they will play out in your favor and the market will kind of shoot up. And so once it made kind of another pullback here, I moved my stop to break even and technically below this little pullback. And so that was really nice little setup for that right there. And then from there, you can see the market starts to really rocket in my favor. And so because of that, I want to ratchet up my stop, take in those profits. And of course, as a target, we're getting towards this high up here. And so if the idea is the market's gonna kind of reverse the sell-off it had, well, we're getting close up there. And so in terms of timing of getting out of the trade, it's likely that we start to find some resistance up here. And so I start to move my stop up pretty tight. We have a little bit of a pullback here of this red bar. I move my stop up there because, hey, you know what? The market has a couple possibilities here. It could do a little pullback and then keep going higher. That would be awesome. Or it could just, crater back lower, and that's okay. It would suck because, who doesn't want more money? But this is a good reason to trail up your stop and get out if it does go against you. But it also gives you, it's a little bit of a support level, super micro, that the market might hold. And so the market essentially just chops around here for a little while, makes another little bit of a break higher. I move my stop one more time, and then it knocks me out. And so you can see now here, that was a good spot to get out. It consolidated, made one little push higher, and now it's looking pretty bearish. And so that's how I like to do timing in terms of getting out of trades. I like to get out anytime I'm getting close to a resistance level for a long. And then of course, on the other side, getting out at support levels. Now, of course, timing the market can be really, really hard. A lot of the times I mess up doing this myself. And you can see here is a great example of, we have a nice uptrend. The market's made a kind of a pullback here into that uptrend. And my thought is, hey, there's room to keep going higher. And my guess is that we're going to punch higher. And you know what? The market just sometimes wants to have a larger pullback before it does that. And so the market ends up knocking me out here. But the best thing you can do is, if you lose and you still have a strong idea of what the market's going to do, is stick with what your read of the market is and go with it. You can see the market here had a pullback from where I initially jumped in, but it made a really nice consolidation that I ended up jumping in on. The market kind of sat around here for a while. It made a really nice bottoming pattern. It showed a lot of strength, kind of hard to see now, but there's two really big bear bars right here of it looking like it would go lower. And so because it didn't go lower there, I thought it was a really good idea that, hey, it kind of faked lower. It's not going to go lower because it hasn't. And so my timing to get in on this, just to quickly zoom back on the trade, was this little double bottom and then a little micro higher low here. And so the market made a nice little bullish reversal bar here. And then I just jumped in with my stop right below there and then bet that the market was going to go higher. And you can see right away it worked pretty quickly. I moved my stop to break even once it kind of got up to here, because maybe the market just comes up here and pukes lower, and I'll just get out at that point. And then from there, market breaks in my favor pretty nicely. Just like always, I like to try and see if there's a really tight upwards trend line that I can manage to trade off of, because of course, timing on the other side, we want to get out when the easy good move is going to go against us. And so I like to either use a previous candlestick trailing stop loss, or of course a break of the trend line. And you can see there, it pretty much breaks the previous candle and that trend line. So this is mainly how I enter and exit. If you want a bigger picture overview of this strategy, check out this video right here. It goes into every detail and walks you through how to use an actual small account with it. I done messed up. I guess it's gonna be a square camera today.